Hey everyone, welcome back. Oh, let's see here. There we go. Perfect. Welcome on back to another Market Open live stream. So today we have Chairperson Jerome Powell, and he is going to testify before Congress, really just to get his confirmation in. But what's really incredible is this is going to end up turning into a conversation about what he plans to do for inflation, and it's going to be quite interesting because the Congress is going to have the opportunity to grill him on whatever he wants, and they're going to look for political zingers on doing whatever they can to basically make him feel like he's backed into a corner. So grilling Jerome Powell is always an interesting sight to see, and we'll certainly put together a summary of what ultimately happens. We think Jerome Powell will stick pretty darn heavily for we'll stick pretty heavily according to script for J Powell. I don't think he'll run too far off, but you never know. We've got Loretta Mester mentioning that she sees 3 rate increases penciled in for 2022, though the market's starting to really price in 4. And J Powell could add some color to this. If J Powell says, hey, if we need to, we'll go to 4, and it's starting to look like we're going to need 4, that could lead to a little bit more red for stocks, which right now, the stocks are mostly tentative. We've got a 0.07 on the Dow, 0.07 on the S&P to the downside, and the NASDAQ futures down 0.19. The big question is going to be inflation. Tomorrow, I think the markets are pricing in 7.1% as a CPI print for December. I think it's way too early for us to actually expect any form of real inflection point to the downside yet, though that would be a welcome surprise, and quite frankly, the market's looking for any kind of positive surprise right now, because at this point, I think everybody's wondering, can it really get any worse for stocks? And the answer is yeah, absolutely. It could get a lot worse. For example, as many folks are hoping for rotation to the downside in inflation, you could actually still have a worsening of inflation first. So, for example, inflation could end up rotating to the upside, actually. And so if we're expecting a 7.1 print, what if all of a sudden we get a CPI print of 7.2, 7.3, 7.4, and we end up seeing something like what happened with the European bloc, where or the Eurozone, where all of a sudden food led to higher inflation, or maybe higher rents, wages, whatever, ended up leading to higher inflation, and you ultimately got a higher CPI print. So we'll see, but that's tomorrow. So tomorrow, 5:30 a.m. will be a big old early start again to get that inflation read tomorrow. That'll be a big moment. I wouldn't be surprised if if today is mostly just resigned to waiting for tomorrow. And while we wait for tomorrow, it's worth noting that there's been this little inflection here in the 10-year Treasury yield. If you grab the 10-year Treasury, yesterday we hit 1.8. And it really looked like we were on a trajectory to continue through 1.8, but we came back down. This is where we were yesterday at about 1.808 at a high. We did rotate right back down, and a lot of folks believe that this right here is actually bond buying, that's increasing the price of bonds. So bullish bond buying on an inflation report tomorrow, that inflation will come down. And that leads to bond buying. If you buy bonds, prices for bonds go up, then yields go down. And that is, in some regard, potentially what's happening here. Always worth, though, also keeping an eye on our cryptos as sort of a risk measure. And you don't necessarily have any kind of a risk-off movement here, specifically because if you look at, here's yesterday morning, we opened. This was yesterday morning when we fell to 39,666, and we haven't really escaped that vacuum or that void. Unfortunately, the more we look at the BTC price, the more it just seems like we fall to a level, and we hang out there for a little bit, and then we rotate back down. That hasn't been a great pattern, honestly, for BTC. So, for example, if we look over here, we can clearly see this fall from our 60 levels, and then we chill out over here at these support lines. Then we get some form of liquidation fall. Then we fall a little bit. We get a little bit of hopium, and then we get a fall. And we're consistently playing the same game here. And so now the question is this chart over here of pain going to push down to about 37.6? And the answer is it entirely could, especially if we get a higher inflation read tomorrow. A higher inflation print tomorrow is, well, almost certain to push, if we get higher than expected, that is almost certain to push BTC down to that 37.5 support level. You can't really call certainties, but crypto and tech is not going to be happy about any kind of movement to the upside in already a very highly anticipated high read for inflation. You do have Tesla that was up 3% yesterday, presently down about 0.71% in the pre-market. So seeing some of that pain extend from yesterday morning. Yesterday, remember, folks, we were down as much as 4 to 5 to 5.5% on Tesla, only to end the day up 3% after some good old dip buying. We saw the same on most stocks. That most stocks really started on the left on the low and ended on the right side here on spark lines on a high. No guarantees for all, but we saw that pretty consistently. If we look at the pre-market, we've got Build-A-Bear up 7.89%. Bill.com, it's almost made me want to say build, but I'm thinking of build back better, and that's just not happening right now. Hold on, let's see here. Lord Mester says, important we take action to bring inflation down. Right. So that's actually interesting. I think that Jerome Powell, when he talks in Congress today, is going to have a very similar approach. I think he's going to be very clear, like, hey, look, inflation's clearly more than transitory. It's been much more persistent and longer lasting than expected, and so it's important to take action to bring inflation down. Wouldn't surprise me for Jerome Powell to basically just say the same thing verbatim in Congress today. So I'm not really expecting a big U-turn or like some form of surprise in terms of what Jay Powell is going to say today. This does come midday. Somewhere, I believe, is it 8 or 7 California time? Let's see if we can find out. Jerome Powell testify. All right, let's get to the answer to that. All right, J Powell meeting. J Powell. Yeah, a lot of pain really came yesterday when Goldman Sachs really came out heavy on the 4 rate increases. That's almost really what seemed to start the day off. There could also be a lot of focus on trading and the trading scandal at the Federal Reserve. I would not be shocked if you get a lot of drama over the trading scandal, which fortunately the trading scandal is a distraction from the actual stock market and broader markets, which is good. That's not to say it's not important to deal with, but it's certainly it gets the discussion off of inflation, at least for the time being. So all right, I'm not exactly sure what time, but we'll get to the bottom of it and we'll circle back. Okay, always circle back. It's like circle back Saki. You always want to circle back. All right, so we'll probably see Elizabeth Warren going off on like that too. Remember, it's a Senate confirmation hearing, so you're not expecting to get AOC in on the mix, and she's got COVID anyway. And we don't want J Powell with COVID. There's no green Mario hat. There's a green Luigi hat. What you talking about, P3? All right. Actually, it's funny. I've been getting a lot more of this question, and it's something we've been talking about in Q&As. is that, hey, is now when there's pain in the market more of a time to buy into things like stable coins, and like ironically, uh, stable coins, in my opinion, have an increasing risk threshold as prices of cryptocurrencies go down. So, this is where the more prices go down on things like Bitcoin, Ethereum, and the stock market, the less risk you actually have on the stock market, Bitcoin, and Ethereum. Remember that. This is something we also talk about, by the way, in the psychology of money. All right, this is why there's a whole program dedicated to this. This is endless psychology. But anyway, the more prices go down on Bitcoin, Ethereum, and stocks, the less risk you have. This is why there are so many buy the dippers. The more prices go down, the less risk you have. Sure, buying a company like Affirm at $75 is way less risky than buying it at $150. It entirely makes sense. Could it go down to 40? Of course. But what has a bigger risk threshold? It's obvious. So the problem with stable coins is that as prices of cryptocurrencies go down, you have more of the potential for increased liquidations, especially if we hit levels that we haven't seen before. So let's just say something went really bad in the market and we had 8 or 9% inflation, right? And then Bitcoin went down to 15,000, a level that we haven't seen in really years since 2019, or maybe early 2020. But anyway, what happens when and if we potentially start threatening those stablecoin markets, and all of a sudden stablecoins potentially start suffering from liquidations, and then people who believe that these stablecoins are there for them because they're stable, but you're actually yield farming that 8% and then you don't get them. The most dangerous time for you is actually when prices of cryptocurrencies are falling down. Now, I think this is a total extreme case scenario. I don't think it's likely to happen, but it's just worth noting that as cryptocurrency prices go down, your risk in stable coins goes up, whereas in cryptocurrencies themselves, your risk is actually going down. So you've got this like inverse relationship. The more prices in crypto go down, the less risky they are. Ironically, though, the more risky stable coins are. And the more prices of cryptocurrency go up, the less you actually have risk in stable coins. So, a little bit more of a detailed explanation there, but anyway. All right. So let's see here. All right. Let's take a look here. So Build-A-Bear is moving nicely here. I want to see quickly in the suit world what's going on with Build-A-Bear Workshop. Build-A-Bear Workshop. Yeah, and I see all the comments about people like, I'll take the 9%. I don't care about the risk. Okay. All right. So it looks like Build-A-Bear raised outlook. We've got, we had earnings that came in. Raises fiscal, was it earnings or guidance? It was an 8K. 8K guides for record profitability. Wow, that's really big. And that's good for retail as well. It makes me wonder if we're going to see a move on like Macy's. No, not really. Only 0.16% on Macy's. So not a huge movement here. Not a real consistent move on tech either. Palantir down. So we're gonna get the bell here in just a moment. But really, the key is first 30 minutes. Let's see if we end up getting this massive plummet like we did yesterday. Yesterday was just a terrible crash to the downside. It followed by this insane recovery. Rivian, by the way, down 3% on news, partially on news that the chief executive or chief operating officer left the company last month. So it's a little old news, but they just reported it.
Trips in the stand where everybody, 99% of the people got it, except for this thing's better than the stand. But you don't read Stephen King? He doesn't read. Do you think he thinks Steve King is the guy who used to be the CEO of David Buck? He's a very famous.
Yeah, it looks like about 60 to 65% green. Actually, if anything, it looks like we're sneaking up on the green side there on the S&P 500. So let's see how the S&P 500 is doing. Somebody here mentions that I'd like to add to the risk assessment that it can be argued that as crypto prices rise, margin goes up. Yeah, that's true, but you also kind of see margin as like layering on top of a foundation, right? So let's say you have a market margin of 20% on crypto, and it got you to 40,000. And then now let's say you add 80% leverage, and then you get to 100K, right? Fine, great. You evaporate when that margin goes away. You evaporate from 100K to 40K. But now you start going down to 19. Now you're eradicating. Now you're starting to dig into the foundation. Now you're starting to hit people at the core. Most people have an average cost basis of over $40,000 for BTC for most of their portfolio. And so when we're under 40K, that's when you actually start seeing the diamond handers suffer real actual losses. It's one thing when like your gains go down. It's quite another thing when like your original principal starts going down. Then you start getting a whole new psychological effect that begins to occur in the market. So okay, what do we got here? We've got let's look at the losers first. So Emran moving down. Oh wait, no, okay, that must have been a leftover bug there. So Owlet down 6.45%, almost under $2 and a quarter here. Voyager Digital down $5, 5.45%, sitting at about $10 right now. Rivian 366 to the downside. Let's see if we got the indices moving in any particular way. Down. S&P moving down. Let's see if we're getting that broad movement here across the same here. Yeah, it does look like the NASDAQ is accelerating losses right now, and Dow Jones and S&P 500 turning a little bit more red out of the gate here as folks brace not only for Jerome Powell today, but tomorrow, CPI data. Really, the question is why be in the stock market today if you don't need to be? You could just come back to tomorrow after the CPI print and hedge yourself against that risk. Remember, we did an look. If you decide to finally join the amazing programs on Building Your Wealth, link down below, really encourage not only watching the lectures but also watching the live streams. The first 15 minutes, so you can they sort of serve as new additional lectures. Not directly as new lectures, but they are effectively the same thing. And take a look at what we talked about regarding hedging yesterday. Really incredible. But yeah, you've got a little bit of a move to the upside now here on Etsy. Let's see here. Tesla. Yeah, Tesla as well. So maybe just the first couple minutes here again of sell pressure, but the SPY still rotating down right now. Yeah, First Solar down about 1/3%. You've got Tattooed Chef down. JPM also down about 1/5 of 1% right now. A lot of folks believing that the banks are the best opportunity to escape to shelter, so to speak. But that's not necessarily always true. Even though we have got an increasing rating environment, it's a lot's going to come down to the impression of what the Federal Reserve is going to do with their runoff. If the Federal Reserve raises high rates 3-4 times this year, but slows down on their balance sheet runoff, that could end up being quite bullish for the stock market. So you could actually end up having a rally in a higher interest rate environment for the stock market with a more dovish Fed in terms of balance sheet runoff. That'll be big, slowing the pace of that vacuum cleaner. Okay, Arrival, Toast moving a little bit here, 2 to 3% each. Looks like Peloton, Lucid moving up as well. So a little bit of excitement coming back into the market. Build-A-Bear up 13%. Really, really good move for the recovery sector. I'm actually surprised we're not seeing more of a lead on by some like Nordstrom or Macy's. I mean, 2%, 1.5% at Dutch Bro. Kind of basic. This is relatively generic here. Not extremely exciting. Las Vegas Sands up 5%. That's great. But in the downside, probably more limited to small caps again. Let's sort by cap here. Sorting by market cap and then looking for green right here. It looks like sorting by market cap, we got 1, 2, 3 green out of about, 15 here or so. Going to the next set. Okay, a little bit more 50-50 over here in that $200 to $500 million range. I think that's mostly because the market is more broadly green. If I go to the megas, not that consistently divided today in terms of market cap. So I don't think you can sort by market cap today and really have a conclusion in terms of what's going on in the market. Tesla did turn green. Now it's bobbing with red over here. So clearly you're seeing that tentativeness over really, okay, what are we going to do? Well, probably the best thing to do if for many individuals is nothing, but the next best thing to do might be just sitting on the sideline. I mean, if we end up getting a rally after CPI, you could always buy back in. If we end up getting a crash and you're on the sidelines, great. If you're hodling your stocks and you're seeing them go down, 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 remember to look at the count. Are you increasing your count or are you decreasing your count? So we'll see. It's always pain in the markets, but pain in the markets tends to be transitory. I know people don't like to hear the word transitory, but it's true. Pain doesn't last forever. Euphoria doesn't last forever. And we're at relatively high levels of pain. That's not to say the markets can't go down substantially more, don't get me wrong. But when the S&P 500 corrects roughly 5%, we have consistently seen a rotation back to the upside, to the trend line. Now, no guarantees, but we just have not seen an S&P 500 collapse of more than 5% very frequently, and we haven't seen it since a roughly election period. Election period or about 353. 353 is a high, 351 is a closing high, 325. So 325 divided by 351 puts you about, about 7.5% in October of 2020. That's the last time you really had this larger than 5% drawdown. And, recently over here in September, we had a larger and longer term drawdown as well. Folks often wonder, like, well, how long is the pain going to last? I mean, a bear market could last quite a long time. We like what we saw in 2018, where you could last 3 months, but you could also go back to the early 2000s, where if you invested at certain points between 2000 and 2002, you could have been flat for 13 years. So a lot of years of that sort of stuff happening. But anyway, 453 over here, down at the bottoms of about 430 or so, 5, 6, 7%, something like that. This sell-off here was more like a 6-week sell-off. Now here we've had sort of 3 spurts of sell-offs. That spurt in November, end of November, mid-December, and then of course beginning of the year here. So we'll see if we end up returning to trend. So far, returning to trend has been relatively popular for the S&P 500, and sometimes we even correct above it a little bit, but we're not really getting a breakout above that trend. So, okay, let's see here. Let's go to, let's see how Baba's doing right now. Alibaba. Welcome to the Alibaba Hotel and Casino. So, 3131, still on its nice rotation over here. Yeah, this Charlie Munger move may really have cast Alibaba as almost some form of a safety play. You have Snapchat up about 3.4%, Neo 1.9%, Roblox up as well with Lucid and SoFi. Yeah, no real major losers here. So it could end up just being a calm, slightly green day today, which I don't know that the markets would be necessarily opposed to a relatively calm day in the stock market, but you're still down about 0.5% on the Dow, 1/3 on the S&P, and 1/4 on the NASDAQ. Let's get the bond movement here. Yeah, 10-year Treasury sneaking up a little bit again, 1.767% there on the 10. Okay, so let's take a peek here. What news we got here? So, bond market worries about the floodgates. So, bond runoff. Let's see here. JP Morgan's Jamie Dimon issues warning. In addition to this vaccinated warning here, Jamie Dimon has come out very clearly yesterday that whether it's 3 rate hikes or 4 rate hikes, he believes that consumers and consumer debt is in one of the most phenomenal places that we've been, of places of stability and of strength. And he believes that 2022 will be a very economically strong and successful year. He's quite bullish. So, quite interesting to see Jamie Dimon come out so strongly in favor of optimism for 2022, when right now it feels like what we have is a lot of pessimism. And there's a lot of reasons to be pessimistic, but as usual, all relatively short-term pessimisms. All right, let's see here. Sparkle lines still a little too early to tell on some of these sparks here for rotating more to the downside. It does look like Nvidia is continuing to provide some discounts along with Etsy. Etsy sitting at 180. Go grab Nvidia here. Down about 1.25, sitting at 270. Nowhere near that discount that we saw yesterday. Yesterday morning was ridiculous, getting down to 256. So red day following a red day here, but nowhere near that sort of pain that we had yesterday. We'll see though. We've got some red candlesticks here, down about 1.62 in Nvidia. Tesla also rotating back down to that about 1% side to the downside. S&P 500 also continuing to sell down. So yeah, DKNG, no kidding. I'll take a look at that. Yeah. There's a comment here about the transmission and the CDC for vaccines. Yeah, that's one of the biggest downsides about the vaccines is transmissibility. If anything, at best, seems to be marginally useful in preventing transmission. But that's always been the argument for a mandate, has been, oh, but it protects other people, like the seatbelt protects you, but speed limits protect everyone. These sort of generic arguments. Problem is, vaccines aren't doing a great job at preventing people from getting sick and then being able to transmit it. And so it's a bummer. I think there was so much excitement and euphoria in 2020 when the vaccines came out in the fall, and we thought that's it. This is the end of the pandemic. A lot of hope. Nope. Oh well, we'll get through it. Again, best case scenario is Omicron hopefully proves to be the most mild variant. Heart goes out to anyone in the hospital. Obviously, we know hospitals and ICUs are approaching peak levels, which we've seen before. Fortunately, with shorter hospital stays, hopefully we can get people through the system quickly and healthily. Anyway, S&P 500 continuing to push to the downside here. Seems like minute after minute here, we continue to get red candle after red candle here. Fernando here says, I think many are selling individual stocks and putting money into index funds / ETFs, and explains why stocks included in those have been up while the rest of the market drops. Yes, an indice bias has been a pattern that's been pretty consistent throughout really 2021, where it's just been relatively easy to rotate out of individual stocks and into the indices. And that has led to the expectation that the indices are going to continue to outperform. And it's unlikely to be the case. Indices then tend to outperform for certain periods of time, and then and the combinations of individual stocks can do substantially better. So it just depends. So P3 says you'll be totally fine if you just get a booster every 2 months. Yeah, I think nobody wants to continue to get repeatedly jabbed. I think 3 jabs by Biden and Fauci is enough. Anyway, so Build-A-Bear up 7%, not as high as what we had, so it's rotated down a little bit. Peloton 3.5. Okay. XPeng, just Matterport at 1.63. So something's up, something's down. Nothing necessarily scary in today's market, and nothing necessarily crazy on the news front. I will let's look in the back here. Let's see what the Sudis are saying. So stocks resume losses as Treasury yields near 1.8% again. Right, we saw that sort of little inching back to that 1.8. Tech sell-off shakes out options market permabulls and options market. Yeah. And that's one of the bummers, is that if you're constantly investing in options as a larger part of your portfolio, it's scary when and if you're in the environment of rapid declines in the stock market, because a 2% decline on indices could be a 10% decline on individual stocks, and a 10% decline on individual stock options could, on the underlying stock could be a 30-40% decline in the security value of that option. So it's you just get evaporated so quickly with options. But then again, that's why you can make money so fast. So yeah, Powell, that's what I thought. Okay, yeah, it is 7 a.m. So 7 a.m. for Powell. So that's about 14 minutes away for Powell. All right, let's take a look at how BTC and cryptos are moving this morning. A lot of talk about a death cross coming back to BTC here. And that's when you get this potential 50-day intersecting with the 200-day right here, which if we continue on this trend just for a few days of even trading sideways, probably get the intersection over here of the 200-day moving average and the 50-day moving average moving through the 200. This is a bearish death cross. The inverse would be called a golden cross, shorter term pain signal. Minute-wise looking like we're potentially bouncing off a little bit of a floor. That floor coming at about 6 minutes after the bell. A little bit of recovery there. Let's go grab, let's see here. Tesla, yeah, a little bit of recovery there at about, the last 5 to 10 minutes here. Looks like some hopeful enthusiasm again. Etsy, Nvidia, almost all showing that similar rotation here. Carnival Cruise Line still going down. Norwegian Cruise Lines is taking some ships and using them as quarantine homes for their staff who end up getting sick with Omni. So, in other words, they literally have COVID cruise ships to house folks, and it makes sense because you get a lot of individuals who they can't just go home. Let's say your ship is docked over at the Bahamas, or off the coast of the Bahamas. Where are you going to go if you get COVID and your home is in the Philippines and you can't even afford the flight back? So the cruise line operators, at least Norwegian, is using cruise ships to house sick employees. Imagine having so many sick people that you need a cruise ship to house them. A lot of sick days getting used this year. That's kind of how the year started. Crazy. All right, what else? Let's take a look at Barron's. See what we got here. All right, so Barron's, airlines are canceling even more flights. Yeah, that's not good, especially for freight. Again, FedEx was complaining about the potential for more supply chain issues as they have staffing shortages for flights. It's not just people flights; it's freight flights. And again, this is why these continued variants, starting with Delta, all really screwed up the inflation estimates. The inflation estimates were that we were going to see some form of rotation to the downside in inflation by the end of 2021, which I think would have been true had it not been for the Delta curve. This is where Delta so substantially affected supply chains that we really doubled down on inflation. And I think the same is true to some extent of Omicron, that Omicron's incessant spread is leading to so many people calling in sick and staying home that there's no way supply chains can really catch up in an Omicron era. So, but then again, hopefully this all ends springtime. But then again, the supply chain issues could be lingering. We still can't get a clear, okay, we're off to the races, let's recover. Oh well. So Pfizer's Omicron vaccine to be ready by March. Who's ready? Who's ready for your next jab? So soaring home prices might slam builders. Ooh, Nordstrom looks like a cheap play on luxury retail. And what else? Proterra. How is Proterra doing really after the Barron's piece on them? They had a really exciting piece on them. Well, it's up about 1% today, but the piece came out over the weekend. Saw reports of employees on quarantine getting just one bottle of water or serve plain steamed rice on the cruise ships. Yeah, it sounds terrible, and it is. But the employee conditions on these cruise ships, even just when it's not because of COVID, are quite terrible. I mean, you're talking about very, very cramped living spaces, 4 bunks to little rooms. I mean, you're asking for COVID spread, and it's really like third world country style living. It's not luxurious for the employees at all. Okay, so I almost kind of almost liken it to like the Foxconn dormitories in China, unfortunately. So Moderna down about 4.2%. IBM rotating down. Let's see what's going on with IBM, because otherwise, for IBM to be down 4.3%, while the rest of the market is, I mean, volatility's up. We got some things rotating green. Let's take a peek here. What's going on with IBM? Okay, IBM. Ooh, vaccination requirements for truckers entering into Canada. Yeah, that's not going to go over well. We'll take a look at that in a sec. I don't particularly see bad news here on IBM. Oh, here we go. IBM downgraded as UBS cuts estimates. Got it. There it is. So a cut from UBS on IBM. Let's see. Canada trucker vaccine requirements. Canada resists pressure to drop vaccine mandate for cross-border truckers. That's just odd. You could say, just truckers. Come on, man. Really, truckers are gonna come import COVID? I mean, I guess they got to go to your diners and your hotel. Well, maybe not necessarily your hotels, but to your restaurants or pit stops and that. But my goodness, the polarization and that COVID has brought us is insane. XL Fleet running a little bit here, along with Toast, both up at just over 6%. Both showing some enthusiasm here in running. Less enthusiasm than what we're seeing with Build-A-Bear. Build-A-Bear lagging a little bit. Matterport, nice enthusiasm as well, about 4.2%. Some of these substantially lower prices than what we've seen. Lucid here about 3.8%. The more this goes up, the juicier some of those shorts become. Don't have any shorts on Lucid right now. Still hopeful for the company as a pure EV competitor. A lot of spark lines here to the upside. SoFi, EXP, AMC, Arcimoto. A lot of spark lines to the upside. It looks like substantially more than to the downside. Let's see the indices again. No one complained of Santa spreading COVID. Oh no. Looks like the NASDAQ technology once again doing the best out of the indices. Now, this is something that we also saw yesterday. At the end of the day yesterday, the NASDAQ ended up outperforming the S&P and the Dow. This is something that if you're an S&P investor, you might want to watch for, is that is it possible that tech stocks end up getting a little bit of an edge over, let's say, the S&P, where right now you're maybe 23, 24% tech in the S&P, whereas NASDAQ's much more purely tech. And so is it possible that it's time for outperformance of the NASDAQ over the S&P? I always like finance.google.com as a little tool. And we could throw in here QQQ, and we can compare that to the S&P. And looking at these year to date here, you could see QQQ down about 5.81%, which QQ means cry more, but S&P down about 3.14. If we go to the 1 year, though, you still see that same almost 2% divergence. QQQ up 20.22% and S&P up 22. So they're relatively moving together here. A lot of this is probably because I think you probably do get traders that jump between the two when you get these sort of well, it's basically how you end up creating these swings to the upside or downside below the other. Anyway, but more broadly, they've been moving almost in lockstep. Okay, individually here, volatility, we're only sitting at 20.6, folks. It's kind of amazing because if you think back to the beginning of what we saw in December, look at this, folks. We went over 30. Over 30. And what's crazy is you could go back to the prices then, and the prices have been more. I'll go to the 5-year on these. The prices have been even more ridiculous. Let's see, 5-year. Oh, look at that spread there. There you go, between the QQQ and the S&P. Yeah, it really actually shows you a divergence there from the beginning of the pandemic. They were much tighter, but from the beginning of the pandemic, the NASDAQ really outperforming there. So incredible. Yeah. Oh, wow. Okay, so let's see here. Okay, what are we getting here? Matterport 5.22%. A little bit of a comeback here. If I really believe if we get a downside shock on inflation and maybe some dovishness then as a result from the Fed meeting at the end of January on, okay, well, we don't have to, suck all the money out of the market or whatever on bond unwinding, then there could be some bullishness. The markets, remember this, folks, the stock market is pricing in a worst case scenario, a set of pain for really March to May, because March to May is when we expect interest rates to start going up, and there's this impression that when rates go up, stocks go down. That's sort of the impression the market has, but that's actually not what we saw at all in the last rate hike cycle. It all really had to do with balance sheet runoff. When the balance sheet was being run off, stocks did miserably. As soon as the balance sheet started rotating back to the upside, where the runoff was paused, we hit sort of a floor and we started growing the balance sheet again. And that was in 2019. We saw stocks take off again, and this was all mostly in an interest rate environment where rates were going up. There was finally an inflection point down in the rate hikes, but if you correlate the charts or watch my video from last night, much less association with rates going up, much more having to do with that balance sheet runoff. So we'll see what happens. Anyway, JPowell's meeting begins in about 2 minutes. Again, expecting him to get grilled on inflation, trading. He could easily say something that could move the market today. It's there's some excitement coming in, I think, trade-wise, to some of these smallers over here: XL Fleet, Canoe, Toast, Matterport, DocuSign, Neo. These tend to have outsized swings depending on momentum trading, and momentum trading seems to be heading a little bit to the higher side today. Tesla's almost green, 0.16 to the downside. But overall, tomorrow is going to be the big determinant. Not so much or solely the Federal Reserve chit-chat in here, because the Fed, I think, is mostly going to punt to CPI data tomorrow. That'll be the big tell. So, all right. Well, there you have it. So, hey, if you haven't yet checked out the programs on Building Your Wealth, lifetime access, daily live streams, course member live streams where we do some Q&A, real estate analysis, really expose you to a different way of thinking about your money, hoping to help you build your wealth. Check out those programs with the birthday code down below. And folks, we'll see you in the next one. Thanks so much for being here. Cheers.